What's going on, motherfuckers? Back with another update video. Very, very solid start to the week. SPY, continuation to the upside, pushing 462 today. AMC reclaiming $7. Green day for AMC. GameStop red today. Not a big deal whatsoever. Everything looks great. No complaints whatsoever. The market is very, very bullish. This video is going to be slightly repetitive from the video I made Friday. I'm just updating charts, and being that we did not gap up today, it looks like we're going to get one more iteration of January 15th, i.e. uptrend and then a pullback into a V end of week. So that's what we're going to be looking for. But not to drag the video out too long, let's just jump right into the video, starting with SPY. So here is S&P 500, the bottoming formation on S&P 500 from all-time highs in January 2022, right here. Perfectly symmetrical move here, all the way through the bottoming formation, cup and handle. All of the touch points are perfect. Everything here looks great. I've been tracking the symmetry for pretty much a year now, and we are coming up on the end of it, the part where we see all-time highs on SPY. And today we saw a continuation to the upside, high of day 462 and change. Pretty sure we closed 462 plus. I'm looking for more continuation to the upside tomorrow, potentially pushing 464. If not, just shredding through that towards 470. Expecting this to things to start picking up here. Like I said in my last video, I'll say it again. It's pretty much air above us. This is all-time highs on S&P 500 right here. It's less than 3 months of price action. There's 2 levels of resistance above us. 464 and change and 470 and change are the final 2 levels of resistance overhead for SPY. This looks absolutely perfect. Very solid day today. I'm expecting more continuation tomorrow. And like I previously mentioned, SPY saw all-time highs in January of 2022 and is once again lining up for all-time highs in January of 2024, which is next month. I'm expecting SPY to see new all-time highs by the end of next month, January 2024, if not sooner. So that's that. I mentioned multiple times as well that the meme stocks, AMC, GameStop, and the rest, both squeezed while SPY was rallying to the upside. All-time highs right here, January 2021 for SPY, and all-time highs right here, June 2021 for SPY. And during both of those periods, the meme basket was squeezing. And I've been saying since I made my channel that SPY would be climbing back up to all-time highs, and when it reached it, the meme basket would be squeezing again. And like I previously mentioned, we're looking for all-time highs on SPY within a month. This is going to happen within 1 month, all-time highs on S&P 500. So that is that. Now getting into AMC, and this is going to be very repetitive. It's a macro perspective. It's always going to be repetitive. Nothing really changes on a day-to-day basis here, but I'm going to continue to go over this because I'm trying to drill this into everyone's heads. AMC is running on a loop. Bull cycle, bear cycle, bull cycle, bear cycle, and we are looking for another bull cycle now, i.e. a squeeze to $1,400. So really quickly, I'll go over the macro again, starting from IPO. So you have your January and June squeeze equivalents here in the green and yellow, your V-shape and your macro break. That is the point at which you gap down into the downtrend. And then over here, you have your January and June equivalent, your V-shape, your macro break, where you gap down into the downtrend. Now getting into the downtrend now, you have your green, red, and blue. On both sides, green, red, blue, that first bounce up from the green is where you find your macro descending resistance on both sides. Both cycles, it's the exact same trend line running down. Same touch it in the red that you see here. The blue, you do not touch it whatsoever on either side. Getting into the flat portion now, these 3 peaks that you see here, right here, does not come up to the resistance, but it's close. The W move, the fake out of the resistance on both sides, and then dropping down to your second and third bottom all-time low. I mentioned multiple times, AMC, very simply put, is January 15th repeating over and over and over again. Every single day is January 15th. When you're in the bull cycle of AMC, January 15th end of day breaks to the upside. When you're in the bear cycle of AMC, January 15th breaks to the downside. And in the bear cycle, when January 15th is breaking to the downside, it continues to do so over and over and over again, forming lower highs and lower lows until you reach your reversal point, your third bottom all-time low landmark, which is where we are now, uptrending off of that. So this looks very good. Moving on to the next slide. So we're going to be zooming in every side. We're going to be zooming in a little bit more into the macro picture of AMC, from the macro into the micro. So the next slide we're going to be looking at is the side-by-side downtrend, the bear cycle of AMC, what you're looking at right here compared to right here, side by side. Now, getting into that, and on this slide, I have the 200 EMA in yellow on both sides. Everything here is perfect. Everything about this chart is perfect. The touch points, the crosses of the 200 EMA, it's all the same. So the previous cycle on the left, the green coming down and then bouncing up, is where you find your macro descending resistance. Current cycle, it's the same story. Coming down, back up, you find your macro resistance. Cross the 200 there as well. In the red, you cross the 200 to the downside on both sides, and then you come back up to the resistance, crossing the 200 to the upside. Then into the blue, crossing the 200 to the downside again, and never coming back up to the resistance while you're in this range here. And the same over here, crossing the 200 to the downside, never coming back up to the resistance, and then dropping off into your flat portion. I mentioned the flat portion is kind of a misleading name because really it's not flat. It is a downtrend. It's lower highs and lower lows to this point here, the reversal point, which is where we are now. But you get these three peaks at the start of the flat portion that you see here, which pokes you above the 200 EMA, does not touch the resistance. Pokes you above the 200 EMA, pokes you above the 200 EMA, does not touch the resistance. Then you get this W move in the middle here, which breaks above the 200 again, and it also breaks you out of the macro resistance. It's a fake out that you see here. The W move here breaks you above the 200, breaks you above the resistance, a fake out. This was that 100% after hours move that we saw in July, from which we pulled back into the resistance for our second and third bottom all-time low, which is where we are right now. Now zooming in a little bit more, and we're going to be taking a look at the flat portion on the left versus the flat portion on the right. And I removed all of the noise from this chart. This is just focusing strictly on the end of the macro, which is the flat portion. And again, flat portion it's kind of misleading because this really isn't flat. It's a downtrend with lower highs and lower lows until you reach your absolute bottom, your third bottom all-time low, which is the reversal point, and from there begins the uptrend. You break the resistance, and it is a vertical line to your squeeze. So really quickly going through this, and again, the resistances are the same. It's the same resistance on the left that you're seeing on the right. The crosses of the 200 EMA in the yellow are the same. So dropping down, choppy, gap up, three peaks poking above the 200 EMA, dropping down, choppy, gap up, three peaks poking above the 200 EMA, the W move, the fake out move that breaks you outside of the resistance on both sides, and then pulling back into it for your second bottom and your third bottom all-time low. So your second bottom and your third bottom all-time low. The price action for the past 3-4 months has been very, very choppy, slow, barcoding, tight range price action here because our macro resistance is it's right there. We are almost up against the macro resistance. And I mentioned multiple times that this macro resistance it's the same line from the previous cycle, but it's not the same in the fact that we have halted every single time that we've touched this trend. As compared to the first macro of AMC, we were not halted ever touching this trend. There was price action breaking above it. In the tri-peak, not a single halt on the macro resistance in the previous cycle. And in the current cycle, we have halted off of this trend every single time that we've touched it. So that is the flat portion. And before I move on here, just really quickly again, the original flat portion, the previous macro, began 2020, ended 2021 when we squeezed in January. Again, it's a vertical line into your squeeze. That's what we're looking for. The current cycle, flat portion, started 2023 and is going to be ending 2024. So roughly 1 year in length for both flat portions, the previous macro and the current. And we are inching towards this resistance every single day. Every single day it drops 50 cents, and every single day we move to the right, one candle closer to it. So this looks very good. And as I mentioned multiple times, the two options here for when we meet this trend is we halt off of it with very heavy sell pressure to the downside and head for zero, which is extremely unlikely, especially with the direction AMC is heading fundamentally, everything that we have going for us. I would bet my life that we do not go to zero. So with that being said, we will be breaking this trend line to the upside and heading for the 3618 fib of $1,400. So that's the flat portion. Really quickly, and this is just a rough sketch. So this is our second bottom, the tri-peak, and our third bottom all-time low right here. So, and this is our macro resistance line here in white. It's pretty much a vertical line, and the all-time low landmark right here, 652 for AMC. Since we touched that, we have been uptrending. Higher high, higher low, higher high, higher low, higher high, higher low. 3 iterations of January 15th, jet test, pullback V, 3 iterations of it. And because we did not gap up today, I'm expecting to get another full week of this iteration. So I'm looking for more continuation to the upside tomorrow, potentially into Wednesday, bringing us somewhere around the $8 range. And then Wednesday, Thursday, Friday, pulling back, end of day, the V heading into Friday, which will be the conclusion of our macro. With that being said, that we are looking for continuation to the upside here and how tight we are between our resistance, we might even see a halt this week. This jet test heading up for a higher local high here is going to be bringing us very, very close to our macro resistance. If not, we might touch it. And if there's enough momentum and things start to get like volatile when we meet this resistance, we might even see a halt. To finish the macro, it's not crime, it is to finish the macro, to pull back and V. Claiming 705 today, a big deal. We've been battling for the 705 level here, the previous all-time low from the second bottom. We've been battling 705, battling to claim it. Once again today, we have claimed it and closed above it. This alone should be giving us more momentum to the upside tomorrow, heading up towards our macro resistance. Again, it is possible to see a halt this week if we get close enough to this trend. But we are meeting this trend line very, very soon. And really quickly, I want to talk about this because this is interesting as well, where on the left is the previous macro of AMC, the second and third bottom all-time low, tri-peak in the middle, and the current macro, our second and third bottom all-time low, tri-peak in the middle. And we're now in this uptrend here. From your third bottom all-time low, you form a slow, choppy uptrend, which takes you to January 15th, 2021, which was a Friday. This was also Opex. This was the Opex date, January 15th, 2021, which was on a Friday. Now, if we do get what I just said in my last slide, another jet test to the upside, and then a pullback into the end of the week. End of the week is Friday, December 15th, 2023, which is also Opex. So we had Opex January 15th, 2021, and Opex is this Friday, December 15th, 2023. And with that being said, that would be the conclusion of our macro. One more iteration of January 15th, up and down, pressed all the way up against our macro resistance, closing the week, which we don't have. Like I said, this line is pretty much vertical. If we close the week 725, 750 range, we are sitting right up against our macro resistance. And with that being said, we will be looking for a gap up that following Monday. And more than likely, if we see that, it will be a straight line directly into our squeeze. This is the whole Opex theory, which I've mentioned multiple times. Both peaks on AMC, January and June, landed 7 trading days post Opex. So you have your January 15th here, it's blurry, but 7 days later, 7 trading days later, we peaked. And then we had Opex here in May. 7 trading days later, we peaked in June, on June 2nd. Now we have Opex this Friday, December 15th, which is very deja vu from what we saw in the previous macro. The January 15th Opex date on a Friday. Once again, this is lining up very, very nicely, especially because we are moments away from meeting this trend line. Like I said, this is Friday here. If we close 750 Friday, we are pressed right up against the resistance. And that's pretty much it. Like I said, we are getting closer and closer to this line every single day that goes by. Really quickly into the indicators. So we'll start with RSI, which has been oversold for 6 months now. Since July, RSI has been oversold. It's sitting under 30. The RSI needs to come back up here towards the overbought range, and it will. And when it does, we will be squeezing. OBV, on balance volume, is sitting pretty much at all-time highs as well. This is our January and June leg up, and through all of this selling, OBV has maintained this level at all-time highs, breaking the descending resistance, bouncing off the retest, and forming a new all-time high, pulled back, and is now bouncing again. And on top of that, the volume profile looks amazing, sitting near all-time high levels on the volume. So descending volume through the previous macro downtrend until the flat portion picks up, all-time high volume in January, and then descending volume all the way through our macro until the end, again, the end of the macro, where volume is starting to pick up as we're heading into a bullish cycle of AMC, i.e. a squeeze. So far, green on the week. I expect that to remain the same. And that is pretty much it for that. And then one last thing, the Fibonacci spiral. So this, I mentioned this in my last video. I will mention it really briefly again. The Fibonacci spiral, the golden ratio, 1.618. This controls everything in our world as we know it. I gave multiple examples last time. Flowers, trees, seeds, plants, whatever, weather patterns, hurricanes, the spiral shape of the galaxy, human DNA. The golden ratio is respected in all aspects of life. This ratio controls everything around us. This is a very interesting chart. Starting this at IPO, all-time low to all-time high on AMC, and starting this at IPO, the first touch point on the spiral is right here at the first flat portion. Volume was very, very low all throughout this until we reach this point. It starts to pick up into our January squeeze, all-time high volume, into the June, and then descending volume all the way through the macro once again, halting every single time we've come close to the top resistance of the spiral, which is also the top descending resistance of the macro halt line, and then breaking out of the spiral and retesting on very, very high volume and curling up here. And as I mentioned in my last video, this is our second and third bottom all-time low that you're seeing right here. The second bottom, tri-peak, third bottom all-time low, second bottom, tri-peak, third bottom all-time low, and now curling up here. When this does curl up, and this is a gigantic W forming here, this is going to be our squeeze. It's going to be a straight line, vertical line, very, very high volume towards my price target, 3.618 fib of $1,400. Now, I'm not saying, a lot of people have been criticizing me for that number. It is a technical move. That is where I will be gone. I'm not saying it cannot go higher than $1,400. I'm just saying that I will be gone by $1,400. I don't want to deal with this if it starts getting to ridiculous numbers. So that is pretty much it for the video. Once again, SPY looks absolutely fucking amazing. We're looking for continuation to the upside tomorrow, heading up to the mid 460s, potentially 470 plus by end of week. And for AMC, I am looking for pretty much the same price action that we've been seeing, reiterating January 15th uptrend here, higher highs and higher lows. Looking for one more iteration up, which would probably take us somewhere around the $8 range, and then one more iteration pulling back into end of week, which would have us sitting right up against our macro resistance. It's also, this Friday is also Opex, just like January 15th, 2021 was Opex. This Friday, December 15th, is Opex as well, and if we get all this price action that we're looking for, we will 100% be expecting to see a gap up next Monday. And more than likely, that will be the start of our squeeze. So with that being said, that is everything for the video today. Good start to the week. Great start to the week. Everything looks great. I'll probably not be making another video until mid to end of the week. I threw this video together today pretty much for my brother specifically. This was a very repetitive video to the one that I made Friday. It's just slightly updated now. So yeah, that's pretty much it. I went over everything that we're looking for. I will not be making a video until probably mid to end of week, barring some kind of crazy shit going down. Again, do not be surprised if we get halted this week. We're meeting our macro resistance, our macro halt line, and this jet test we're looking for here likely will be taking us up to it or very close to it. And if there's enough momentum, enough buying pressure here on this wave up, we very possibly might be halted off of this trend one final time to pull back into the V and then looking for a gap up next week. Everything looks great. No complaints whatsoever. Absolute fucking bull market. I'll catch you guys in the next one.